This is case in point 1-3, determine the impact on accounts. We have already completed transaction number 1. We're working on transaction number 2. Nathan's Donut School pays $20,000 for baking equipment. So in step 1, we need to determine which accounts are impacted. So the school is paying $20,000 for baking equipment. We know that cash is going to be impacted, and we know that an equipment account is going to be impacted. In step 2, we need to determine whether there was an increase or a decrease if the balance is changed. So if we're paying out cash, cash is going to decrease, and we are getting equipment in return, so the equipment account will increase. And then we need to determine the amount of the change, and of course that's going to be $20,000 in this case. So $20,000 decrease in cash, we're also going to have a $20,000 increase in cash. And notice what happens in this transaction. Our assets increase and our assets decrease, a net change in the accounting equation of 0, and our accounting equation still balances. Assets still equal liabilities plus owner's equity, and you can look at it down here in the bottom in the final total. Total assets equal liabilities plus owner's equity. So